CIMB Group Holdings reported an 80% plunge in fourth quarter net profit to just over 200 million ringgit, the worst ever quarterly performance for the banking group. Group CEO Tengku Abdul Aziz says the drag was caused by a sharp increase in provisions for corporate banking loans in CIMB Niaga as well as its Malaysian operations.
There are challenges at the macro level. We're looking at a very tight liquidity environment, and of course, there's a new country leadership there. There is also potential spending increase. We're looking at that on the macroeconomic side. But I mentioned earlier, the first quarter there will be some concerns on asset quality.
Revenue for the quarter was at 3.7 billion ringgit, down 3.3% compared to 3.8 billion ringgit a year earlier. For the full year, CIMB's net profit was 31.5% lower at 3.1 billion ringgit from 4.5 billion ringgit a year ago. Revenue also declined to 14.2 billion ringgit. On reports that the group would be cutting jobs in Asia as part of a cost-cutting exercise, Tengku Zafrul says the number is closer to 150, including the closure of its Australian offices.
We will continue to look at the whole, not just Malaysia, but the whole franchise, and we'll review. As part of our T18, there's a strategic cost management program. So we will relook at not just personnel costs, obviously, at the procurement, at the processes, and everything.
Moving forward, Tengku Zafrul says he expects lower growth in the Malaysian market this year.
Malaysia, we feel that the slower economic environment, and of course, there's pressure on consumer spending. So we expect a very still a growth, but not a very strong growth for Malaysia compared to last year.
He is, however, more positive on the group's operations in Singapore. Shalini Kumar, The Edge TV.